Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Chris Dearborn. He's the managing director on Nasdaq's Market Intelligence Desk. And for the first full week of 2020, the markets just continue to see all-time high. Chris, the action has been relatively interesting considering all of the macro factors that we have out there.
There's been a lot going on this week, and started with the end of last week. You have geopolitical concerns. Obviously, it's been a major talking point here with real-world consequences. And the markets have had that buy-the-dip mentality once those de-escalations started to take place later on in the week, bringing us to all-time highs here. The Dow crossed over 29,000 today, kind of a remarkable feat. You know, and it's not really, that's one of the Main Street indexes, but the real investor indexes, the S&P 500, Nasdaq 100, Nasdaq Composite, have all been on fire.
Yeah, Nasdaq 100 over 9,000 for the first time this week. Let's take a look at our first chart. This is from a longer-term perspective. It's the S&P 500 on the monthly.
Right. So long-term momentum for the Dow and the S&P 500 looks very, very good. And you look at this chart here, you see a number of different bull signals. Brian wrote up about it a couple of weeks ago, and it's really come into place here. Long-term bull signals have very good long-term consequences for stocks and indexes across the board. And what you're looking here is at the MACD. So the MACD made multiple bullish crossovers, highlighted in the circles here on the top and the bottom core lane. The MACD crossovers are located on the bottom. And generally, when you have a crossover, it's a good bullish signal for stocks to come in the near term and also in the 12-month period following as well. You see on average, the S&P gained about 5.5% over 6 months from each one of these MACD bull crossovers and almost 10% over a 12-month period, signaling that there has legs to the upside. And we just recently made one in the S&P 500 back in September. So what you're looking at here is a signal that this market is not running out of steam. You know, you're seeing slowing global growth. The non-farm payroll number today is a very good example of that. You still have growth, but it's not as robust as people think. I mean, if you look back at 2019 on the payroll jobs report, you've added north of 2 million jobs in 2019. Remarkable, right? Wages have slipped a little bit in December, but they're still showing growth. Again, it's that slowing global economy, but you're still seeing signs here that there's still room to run. And this, for the investor, especially for the S&P, and when we get to the Dow, you see the same thing, is really showing that there is going to be legs in this market, barring any black swan scenario, for the next 6 to 12 months. And we're 4 months after this month of this crossover, and we're still here in the S&P making all-time high.
All right, let's move along to the Dow right now, crossing 29,000 for the first time, certainly being helped by Nasdaq-listed Apple and Microsoft. Those two stocks have really been a big part of this move.
Right, so going back to that MACD crossover that we show, if you look here just recently, back in November, the Dow did that crossover also. And again, that same theory holds true. You're looking for a 4 to 12 month increase here. We're 2 months into another 4 months on that, 6 months. And you're looking for 5 and then 10%. And with the all-time high today, it's proving that this crossover is holding true. And therefore, the Dow also has legs. Again, different type of style for the indices. S&P's market cap weighted versus the Dow, which is price weighted, heavily weighed in by Boeing. But what you're looking here with the Dow is that this crossover is very bullish and has possibly very good things to come for the first half of this year.
All right, let's take a look at the trading week ahead, because as we talk about the momentum that we're seeing here, we're going to get into earnings with the big banks kicking it off unofficially next week. And the concern that's out there is valuation, of course. And with expectations as high as they are, companies are going to have to perform really well.
They are. So what you're looking at is 2019 was a soft comp year. Even though the companies did perform well, a lot of them outperformed the numbers. It was very soft compared to the previous few years. And moving into 2020, you have a lot of items, especially speaking to the banks, on the financial side. You had the Fed pivot from last year that's really kind of kicked things and set momentum off. You really had two things last year kind of drove the market. You had China trade talks, which was the engine that drove the markets higher. As that started to de-escalate, the markets continued to do better and better on each price point. But really the fuel that fired that engine up was the Fed. And when the 3 rate cuts, QE light, not to mention the buying back into the treasuries, you're looking at significant momentum coming forward. Clarita was on yesterday speaking, and he said, broadly speaking, I would reject any suggestion that just because the economic expansion is in its 11th year, it's about to end. That could go very well for financials.
All right, Chris, thanks so much for joining us as always. And thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.